Good morning from the For the CME. This is Chris Robinson with your January 6th, Tuesday grain report. What are we looking at as far as trades? Well, in 3 business days on the 12th, we're going to have the USDA report. That's the number one thing grain traders are looking at. We started off the year yesterday. It looks like there was a lot of money flow from oil into the grains. We'll see if that continues. Now, the funds have made a very good size long bet in the corn, especially. They're long 240,000 contracts of corn. That's 1.2 billion bushels of corn. That's a lot of corn, even if you're, Kellogg's cornflakes. It's a lot of corn. They own about 8 to 9% of the entire crop that we grew. So on Monday, if they're right, they're going to continue to make money. But if they're wrong and long, it could be another trip on the pain train for any bulls that are with them. So good opportunity there. That's really what we're looking for when we're looking for trades. Look for opportunity. So we know the funds are long. They're long about 40 to 50,000 contracts of soybeans, closer to 40, and 25 to 30,000 contracts of wheat. A little bit of a story. Some guys trying to get behind a possible weather market in South America. Although with harvest already beginning, it's the next 2 weeks would really have to heat up. Now they're talking about some dry temperatures down there, but it is summer in South America, and we'll have to watch that carefully. That could be something that could give the beans another leg up. The second thing I wanted to talk about, if you look at technical analysis, March beans, it's been in a triangle formation. I'm calling it the triangle of death. Last Friday, we took out the bottom part of the triangle. We turned around and took out and went higher in response to that. So we've taken out both speculative shorts and speculative longs on this whipsaw in this triangle formation. Why is it important? Well, technical analysis is something that a lot of traders look at. There's a good trend line of resistance going back 6 months in March beans, and there's support underneath the market with about a 3.5 month support trend line. Again, technical analysis is only as good as the person that's looking at it. If technical analysis worked all the time, there wouldn't be any cab drivers in Chicago. But you've got to be looking at that triangle formation. A lot of traders are looking at that as well. And other than that, I think you look at the third thing, which is what's going on in the livestock. The livestock had a very, very good rally. We had a severe break. If you take a look at the charts, then we snapped back after making 3 and 4 month lows in feeders and fat cattle. We had a good bounce back. How much of a bounce? We had a 62% retracement, which is another technical level that traders look at. Lo and behold, here today, after we went up and got that 62% retracement, we're lower. So it's giving you an opportunity. So look at the corn and the bean trades, and also look at the charts for feeder and fat cattle, especially feeder cattle. We're all going to focus in the next 3 days, getting ready for the Monday, the 12th USDA report. That report represents one thing, and one thing only. It represents opportunity. From the For the CME, this is Chris Robinson. Have a good day.